Well, of course, the markets are in focus as they always do, and the S&P is still within striking distance of an all-time high. Joining me now with more is Jay Woods, Chief Global Strategist at Freedom Capital Markets. Jay, great to have you on the show.
Great to be here.
Yes, and we do see the S&P right within that striking distance of an all-time high. How stable is this position?
How crazy is it that we're talking about this? I went to bed Sunday night expecting, us being involved in this conflict for a sell-off, and the futures were selling off, and we rallied. And then we got attacked, and we rallied. And now it looks like there's a pause. We're rallying again. People are scratching their heads, me included, that we continue to climb this wall of worry, and yet here we are talking about new highs. It is very possible we hit new highs by the end of the week. The way we're seeing leadership in stocks in the technology sector continue to climb, some of them making new highs. Cisco, IBM, Microsoft. This is strong leadership, and the sideshow, unfortunately, has been what's going on in the Middle East, and that looks like it's calming down, and that's great for this market.
Where do we stand on tariffs? Because we know tariffs certainly did add a lot of volatility to this market earlier this year.
Yeah, without that tariff liberation day, God knows where this market would be. That was the one thing that really scared people. The geopolitical events aside, we've been doing okay. Now we've got to watch. That'll be next week's story, so we can just talk about this next week. But we're getting close to that July 9th deadline where we kick the can down the road. People talk about the taco trade, 90 deals, 90 days. We gave them a reprieve. We only have one deal. It's with England. I still don't really understand the terms of that. So the tariff trade will be front and center. But right now, market participants are shrugging off that news, thinking that we'll come to some sort of agreement. We know what the worst case scenario was. We're not going to get anything close to that. And if we can come to some agreements or move it down the road, then it's all good. But right now, I think people are going to talk more about Jerome Powell and the Fed than the tariffs, because that's front and center today.
What does history tell us about the current conflict, the scenario that we see playing out in the Middle East in terms of how protracted this might be?
Yeah, well, that's what I did all weekend long. I went back in history and looked at these conflicts, and you look at the most recent one, Ukraine and Russia, which is not the Middle East, but it did have a direct impact on oil and the market. So you anticipate, all right, where are the levels where it could sell off to? And we didn't sell off. So to me, this is new, living through the Gulf War and a few other conflicts. This is something we've never seen before. So what I do as a technician is I just look where the strength is, and the strength is in sectors, industrials and technology, that are sectors you want to see leading this market. So I think the geopolitical circus is not going to impact us as greatly as we had feared it could based on prior events. And now we focus on Fed policy, tariffs, and then earnings as earnings season kicks off a few weeks from now.
A few weeks from now, we're also about to round out the second quarter, right? And how did the second quarter start? With tariffs, right?
Yeah, second quarter will go down in the record books as one of the craziest head-scratching quarters in the world. We are going to possibly close at new highs. We avoided some major headwinds with the sell-off during the tariffs. Still no resolution, but I think we're poised to set up for a great second half of the year. But watch Friday. Friday's the Russell reconstitution. Yes. You talk about the end of the year. Should be the busiest day for the traders down here. That close is epic. So every ETF, every fund manager is rebalancing their portfolio, and that close is very important. So expect a lot of activity here on Friday.
We've already seen some record volume days during the second quarter, right? Two of them, in fact, following the tariff announcement earlier in April. But I do want to talk, Jay, now about the second half that you said is setting up to look pretty well. How does the Fed factor into that?
Well, the Fed is a big factor because they still projected in their last dot plot after the what month are we in? June meeting. I'm thinking July, June, losing my focus. But at the June meeting, the dot plot said 2 more cuts. So we're running out of meetings. July, not so sure. We may get more clarity on that when Powell testifies today on the Hill. But September, December look like potential cuts. So we're still in that easing policy. Inflation hasn't gotten out of control. Concerns are legitimately there, but it hasn't hit the bottom line. And if the Fed is going to remain data dependent and take these data points one at a time, the time to cut is now. The time to cut will be at the next meeting and the September meeting. So we'll see. Washington's going to put a lot more pressure. It's not just the president. There are a lot of people. Bauman came out just the other day, Fed President Bauman came out and said it's time for a cut, and a few others are making the rounds. So we're going to get some Fed speak that may diverge from Powell's let's be patient narrative, and I think the cuts will be the second half story. Now the question is it already in the market, or is this going to be a catalyst to really take things higher?
Right. And in terms of how companies are positioning themselves with the uncertainty, I don't think that word has gone away, Jay, the word uncertainty out there. And so as we look forward to corporate earnings, which you referenced earlier, what position does this put these firms and leaders in as they do still need to navigate uncertainty?
That's a great question, because uncertainty is the word of the year, and it's been used so many times in every forecast going forward when the companies want to guide. The quarters have been solid, especially in the tech sector. They're hitting on most metrics. Those that hit have done well, but the guide has been, uncertainty, no clarity there. So if the tariff resolution does come sometime in July, then I think the guidance will be more positive, more upbeat, and tech stocks are going to break out. We've already seen it in Microsoft. Meta's knocking on the door. Watch NVIDIA. NVIDIA, this 150 level, we're at 145. That breaks out after a year-long consolidation period. That stock's going to run, and it's going to take the market with it, because market cap is what drives these S&P 500 names, and those Mag 7 names, those biggest stocks leading, are what we want to see.
I want to talk more about the momentum that you're noting in that particular sector, because many would say with the president's policies now in place, sectors like financials, even energy, these should be sectors that would benefit from a deregulatory stance, maybe not necessarily the tech names. But is the tech sector flashing to you that it can still, in fact, lead this market?
Well, without a doubt, tech sector, but you just brought up a great point, the financials. There was something that just kind of went under the radar yesterday. BNY is talking about acquiring regional bank Northern Trust in Chicago. We haven't seen a banking merger out of, they're done out of necessity. We had the regional banking crisis, we had 07, 09, we remember that. But we haven't seen banks merge since my young days here, 1998 to 2003. And this is very positive. So if we see regional banks start to talk to each other, some of the bigger banks looking at some of the smaller regionals, watch PNC, M&T Bank, Fifth Third. These are names that are starting to rise, and that was something we anticipated in the new administration. This happens, it probably would happen over the weekend, but it looks like there are negotiations going on, and to see M&A activity return, not just good for the banks, but then in the bank sector, this is very bullish, and that will help not just the technology sector, which rally, but then the financials lead too. This is what you want to see in a very secular bull market.
Good to hear a bullish take, Jay.
Yeah, it's hard not to be. I mean, just don't read the headlines, and it's easy to be bullish.
Follow the numbers, right?
Follow the numbers.
Follow
the charts. Yeah.
All right, Jay Woods, he's a Chief Global Strategist at Freedom Capital Markets. Jay, thank you as always.
Thank you.